Hi everyone, my name is Jordan Lee and I'm a mortgage lender based out of Portland, Oregon, and I wanted to chat with you today about how an auto loan can impact your ability to qualify for your mortgage and how the monthly liability can impact your purchasing power or amount you can qualify for per month. If you're new to credit or building credit, you may have heard that getting an auto loan can help your credit score, help improve your credit score, and help you qualify for a mortgage. While technically that is true, the FICO algorithm does look at whether or not you can manage multiple lines of credit. So can you do a credit card, two or three credit cards, and an auto loan and student loan and a mortgage? If you can manage all those things, make your payment on times, that's a great sign for the credit bureaus. However, when you take out an auto loan, it's considered an installment debt, and whatever your monthly payment is will count against you in your qualifying ratios, or what we call debt to income ratio. So I want to take a second here to break down the numbers for you. So this right here is what we call a debt to income calculator, and this particular client or example, we're assuming a $55,000 annual salary, or about $4,600 per month. And if they didn't have an auto loan and just had three credit cards that they were paying off regularly, they could qualify for close to $2,000 a month as a monthly payment. Again, we're generally speaking, we're not qualifying for a purchase price or a month or a loan amount, because every property has different taxes or HOA fees. So we're actually qualifying for a monthly payment. But if they did have this $700 per month auto loan, they'd only be able to qualify for $1,300 a month. So if we look at this next sheet, we can see how that translates into in regards to purchasing power or amount that this example of a client could qualify for. So let's say they were putting 5% down, they had great credit, so their monthly mortgage insurance is pretty low, and the interest rate happens to be at in the high threes today. So you can see that this would be, they would go from being able, without the auto loan, they would be able to qualify for close to $340,000. But with the auto loan, they'd only be able to qualify for about $220,000. So, I mean, you can see how a $700 a month auto loan impacts your qualifying ability by $120,000 in purchase price. As a side note, I picked the value of $700 a month because if you purchased a new car, it's the Kelley Blue Book value average is $37,000 for a new car in 2019, and that breaks down to about a $700 monthly payment if you do it in 5 years and don't put any money down. So you can see how having a big auto loan like that can have quite a severe impact on your monthly payment, and in order or monthly qualifying ability. And in order to offset this, the equivalent in terms of income, you would have to get a raise of $19,000 annually to offset your qualifying ratios there to make it so you could qualify for that $340,000 house. So while you may be able to qualify for a big, nice car, nice new car, you might think about going for a used car like me, and buying something for $3,400, and that's a 2008 car that is reliable and runs well. If you have any questions about qualifying power or how an auto loan could impact your ability to qualify for a home, just reach out at any time, and I'll put my information in the comments below.